the longer term. We have someone who buys for the longer term. Nandita Parker, managing partner of Karma Capital, joins us now as our market master for the morning. Nandita, good morning. Thank you very much for joining us.
Good morning.
Well, traders are in a happy spot today with the handover from US being very positive and Asian markets cheered, China not around to play spoil sport. So green all over at this point in time. But you tell us, this is bad news being read as good news from the US markets. The jobs data wasn't too good. Do you think the market celebration could be short-lived, that the world will have to perhaps get used to lower growth numbers and we may see that reflected in the equity indices?
So that's a lot of questions, Lata. From a US standpoint, the Fed liftoff has been delayed. And I think the markets have had time to adjust to whenever the first rate hike actually takes place. If you think back at how long it took for QE to end, the markets had, by the time the end started, the markets had adjusted to that. Similarly, I feel that by the time the Fed does hike interest rates for the first time, the markets have had sufficient time to take that into the stride, especially emerging markets. They have been reeling every time there's been talk of a rate increase. So I think that, yes, we are looking at a slower global growth scenario. It's a very uneven scenario, and in fact, India is looking like an island of prosperity where EMs are concerned. So all in all, it's a positive environment for India. It's not as great as it could be, but I'm looking at the bright side and saying, well, now India has a chance to build its infrastructure at a much lower cost than what China was facing. And so it's actually looking like a really good scenario from an India market standpoint.
Okay. Nandita, hi, morning. So have you increased your allocation into the Indian markets at this 8,000 level? And what is the risk reward looking like now in terms of returns for the market?
Yeah. So, yes, I mean, as I'd mentioned to you a couple of weeks ago, we had cash levels and we've been deploying them. We're very glad to see Governor Rajan finally biting the bullet and giving the market something to cheer. I think that was long overdue. So we have been increasing our exposure, and our investors in the US as well are positive on India.
Okay, now which segment of India you like, Nandita? Let me start with some reforms being announced for the state-owned banks. One of them is likely to be recast in such a way that the government shareholding comes down, like it has done in Axis Bank. It's an indirect shareholding. As well, some of the state electricity board of loans are going to be recast. Is that it's a beleaguered sector? So will you look at public sector banks?
I think it's time to take a look. I think that it's a very good act by the government to shift the loans from the SEBs to the states with the idea that they will have better control in terms of allocation and getting repayments, and also to not burden the banks anymore with with further NPLs. So I think it's a good time. I think what I'm saying, therefore, is that it's a broader-based positive for the economy. And my interactions with various ministers and people in the ministry are showing that there's a lot of work being done on the ground. It's not what you might call big bang reforms, but there's a work through that's happening, which is setting the stage for a broader-based market rally and a more positive environment than what we've seen in the past 9 months.
Okay, well, I just want to point out one stock, Tata Motors. It's up 8% right now. So just look at the intraday chart of Tata Motors. The volumes are piling up on that one. And not just Tata Motors, but the DVR as well is looking extremely good at this point. Nandita, how do you approach a stock like this? It's been battered because of the issues in China, but now there seems to be a valuation argument that's playing out.
Right. I think that there were a number of issues with Tata Motors. There was China, and if you can see, the similar issues were playing out in the luxury cars, in BMW, in Daimler, and so on. So the slow growth of China had played into the segment. Last week, the Chinese government has announced a stimulus for the car industry. But this stimulus is actually targeted towards the smaller cars, less than 1600 cc. But it impacts 13 million cars in China. So I think there is a growing feeling that the Chinese are addressing growth and that they are going to be providing more stimulus. And maybe that the concerns over the Chinese economy are overblown, that they will be able to slow down and manage their slowdown a little better.
Okay. Therefore, how would you play the auto sector in India in terms of the auto ancillaries? We saw a fairly well-run company like Motherson Sumi get it on the chin after the Volkswagen news. Is this for a long investor time to buy the distress?
I would say that. I would say that. I mean, in the past, I've found that instances like this, when a good quality company has been battered the way Motherson has been, it's been a good time to buy. Now, this time period to buy could, it could extend for 3 or 4 months. If you look back at Maruti, this is what happened with Maruti a couple of years ago, and anyone who had bought Maruti in that downdraft when their controversy with the Gujarat plant was taking place would have generated a significant amount of returns. And so what I would say is that it's a high quality stock. Yes, there have been some concerns, but not that it's going to blow over. But there is sufficient diversification within Motherson in terms of its client base that over a period of time the story will play out.
Okay. So, how are you approaching the market in terms of sectors now? You spoke about financials and autos, but for the next, say, 6 to 12 months, what would your top preferred sectors be? And, on the other side, on the flip side, what are the sectors that you would stay away from?
Right. So I'm not a big fan of commodities even now. So when you talk about value picking, that's not where I'm headed. I tend to be very bottom-up in my approach. And so even when I talk about financial, I would rather go for the well-run financials or the ones that have a higher way of a delta in terms of the upside. But other than that, we're positive on consumer discretionary, especially in the media sector. We think that there's a lot of room there. I mean, to give you a data point, even in this slow growth environment that India has had in the past few months, TV broadcast advertising has been growing at 13%. And something like the Z says their advertising growth has been double that or almost double that. So, even in this environment, there have been pockets of growth. And obviously, as growth accelerates, there will be more to come. So I think that from a rate cut perspective, we're looking at white goods. We're looking at air conditioners, building products. Those are some of the areas where I would, buy the correction.
Okay. You wouldn't look at NBFCs. You spoke about public sector banks, but basically, how would you play the financial sector?
So I like the housing finance companies, but I'm extremely selective again. And I'm happy to play some of the, I mean, I can't give that away, but, within the housing finance companies, the higher quality ones.
Okay, that higher quality one is now at 3.2% higher today. HDFC raised money very, very cheap on Thursday. Its debentures are just going to cost them about 1.7%. And of course, with the warrants, it will be even cheaper for them, though it's a 2.2% dilution when the warrants are exercised. But HDFC is actually the top most gainer today on the Nifty, up 3%. You're going to say something?
Oh yes, no, I just wanted to ask Nandita about, the issue that took place on Thursday, which was with regards to HCL Tech. Nandita, how do you approach some of these names? I mean, there are some client-specific issues that HCL Tech has referred to, and the stock saw a big fall on Thursday rather. But this stock has still been one of the big gainers this year. What do you do with a name like this?
Mm-hmm. So I have not owned it of late, so we own Infosys in this space.
Okay.
What about the infrastructure space? You began by saying that India is in a sweeter spot in terms of building its infrastructure space. How do you play that theme?
Yeah. Well, I mean, there's Larsen and Toubro, the mother of them all. And I think eventually when the orders do come in, which they will, I mean, it's a matter of time. And this is one of those big beneficiaries. But I think even in the small and mid caps, there are plenty of companies that have, higher governance standards. At the end of the day, to me, the most important thing is governance within the sector, because, the valuations can be, marginally better or worse. But what will give you sort of wealth generation ability is going to be with companies that have done well even in a downturn, that have been fair to their shareholders, not taken on too much debt, and then, grow from there.
Okay. Just one final question from my end in terms of how you would approach the pharmaceutical stocks now, because, names like Lupin, Dr. Reddy's have given you big returns this year already. What are the top stocks that you own in that space, and do you expect to see outperformance?
So I think a lot of the work has been done there in terms of returns for the year, and I think as the market shifts towards the stocks that we discussed, there might be some kind of a correction there. So I'm not overly positive given these valuations. I think they're, in portfolios they can be core holdings, but I wouldn't say, there's something compelling today to go and put new money in.
Okay, well, just finally, there's one theme that, has not gotten the attention from investors. The payment banks, those licenses were given out, and they're all guys with deep pockets, some of them with extensive networks. How do you play that theme?
I'm going to wait.
Okay, and see who will eat up whom. All right, Nandita Parkar, we'll leave it at that. That's a lot of ideas you've given us already. Thank you very much for joining us. So India is